All right, we'll just share it. Yeah. All right, Deborah, how are you? We're having a little technical difficulties trying to share it live to Facebook. So we're just gonna hop right in. All right. This is Alana. You met Alana at the coffee shop.
Hi,
This is Lana Hayes with Guild Mortgage, everybody.
nice to be here. Thank you for having me.
Absolutely, absolutely. This will be the second of many events coming from Alana and I. So today we're just going to go over the home buying process for you that aren't familiar with it. It can be intimidating, but it's really not too bad once you learn the steps. And so I'm a realtor. I'm a realtor with EXP Realty. My name's Travis Wright. So I'm going to go through these slides. The first step in the home buying process is understanding how it works. The home buying process can be very depending on location, type of home, and the specifics of the transaction. However, generally, the process includes the following steps. So step one, pre-approval. Before you start looking for a home, it's a good idea to get pre-approved for a mortgage. This will give you a better idea of how much you can afford to spend on a home, and it can also give you an advantage when making an offer on a home.
And that's the part that I would come in to help the pre-approval process, because you're going to want a pre-approval letter to give to the realtor so that you are ready. The house comes on the market, you've got your letter in hand to go look at it. There's a lot of multiple offers sometimes, and you want to be ready for your game.
Absolutely. So after you get that pre-approval and you know exactly what you're looking at, you get your payments set, what you want your payments to be, and we can get them close so that we know. But number two would be the house hunting process. Once you've been pre-approved, you can start looking for a home. You'll want to consider the type of home you need, the location you want to live in, and the features you want in a home. You can search for homes online and work with me who will help you find homes that meet your criteria. What's up, JC? How you doing? Connect. Oh, cool.
I'm doing great.
All right. So step number three, after you find the perfect house, the house you want, you make an offer. Once you find a home that you want to buy, you'll need to make an offer to the seller. The offer will include the purchase price, the closing date, and contingencies such as dates for inspections, appraisal, and many others. Step four would be negotiations and closing. Once the seller receives your offer, negotiations may take place. This can include discussing the purchase price, closing date, contingencies, and any repairs that need to be made before closing. Once both parties agree on terms, a purchase agreement is signed and the closing process begins. So once that happens, you'll need to deposit your earnest money immediately. That way it don't slip through the cracks. I believe you have 48 hours, but I recommend to do it immediately. That way it's done, and you just get that part out of the way.
I would also recommend on the earnest money, make sure it's paper trail it. Do not give cash. On the mortgage industry, cash is bad. So earnest money, a preferred way would be a personal check out of your checking account. But if you can't, a lot of people don't do personal checks anymore.
Right.
So if you have to go, say it's a $500 earnest money, go to your bank, withdraw 500. This way you paper trail, and here's the 500 withdrawal that's going to match now the $500 cashier's check purchase or money order purchase. You have to paper trail it so that we can give you credit for it.
Yep, absolutely. So an earnest money deposit is a way for a buyer to show the seller that they are serious about purchasing the property. It is held in escrow until the sale is complete and is usually applied towards the purchase price of the home at closing. Cool. Number 6, I also recommend you get an inspection scheduled immediately after we sign the papers. That's a step. Earnest money in it run hand in hand, in my opinion. That way you can get on the list because there's a certain time frame that you have, and it's usually 10 days to get the inspection done and negotiations. So it's a time deal. So for sure, get that home inspection going immediately, and I can give lists for that. So before closing, it's important to have a professional inspector check the home for any potential problems. You will have the opportunity to renegotiate the purchase price or back out of the deal based on the results of the inspection.
Because us as a mortgage company, we're at this point in time, we're also thinking about doing the ordering the appraisal. But the thing of it is we don't normally like to order the appraisal till we get the green light from the realtor and the buyer because we don't want to spend your money. Once we order appraisal, it starts the money. So if the home inspection, for example, is it Lemon, has some TRRs, repairs you're working out negotiating with, we don't want to order that appraisal if those items cannot be, negotiated and finalized. So once everything's good and everyone gives us the green light, that's when we go ahead and order the appraisal.
Absolutely. So after that is the closing. Closing is the final step in the home buying process. It is when the title of the property is transferred. The property is transferred from the seller to the buyer, and all closing costs and fees are paid. The closing process can vary depending on the location and type of transaction, but generally involves signing legal documents, paying closing costs, and transferring the ownership of the property. Number 8, it's the best part, right? Move in. Once closing is complete, the home is yours and you can move in.
And welcome to the 30-year club.
The 30-year club. So at that point, it's important to know the steps. The process can vary depending on the location, type of home, and specifics of the transaction. Whoa, a little too far. So here's some more knowledge. We're going to get into mortgages and types of mortgages, different loans, stuff like that. And the expert will guide us on that. So in order to buy a house, you either need the cash for it on hand or you can use a loan. This type of loan is called a mortgage. The first thing to do is speak to a lender, Alana Hayes at Guild Mortgage, and find out what amount you would be qualified for on a mortgage.
So there's various types of loans, and all is going to be dependent upon the borrower's needs and the property. We do here at Guild, we do all different types of loan programs, all the government programs, FHA, VA, USDA, conventional, and they all have a little bit of differences. I'm going to kind of wing it a little bit.
Yeah, go ahead.
So typically around here, we do mostly VA ones, just because we're close to Fort Sill, a lot of veterans, but then USDA would be probably the next one that I would focus on, rural areas. But FHA is the easiest one to get approved for, less money out of pocket, 3.5%. We can bend the rules on FHA and go to a high debt to income ratio. And so that's very nice. VAs are no down payment. VAs are for the veterans. There is no mortgage insurance on VA. So that's always a good one there as well. Plus a lot of the VA ones, there's some fees that the veteran is not allowed to pay. So usually us as lenders, we have to pay those.
Pay those, get
We have to
creative.
pay those.
Get creative.
Yeah, so this area is a very rural area, so that's when USDA plays a part too. And you have to look at the big picture. What, as far as your borrower, what loan program best fits their needs. USDA is a no down payment loan, just like VA, but the rural areas, the greater Duncan area and the greater Lawton area do not qualify for USDA. You also have to you cannot own a home on USDA already. USA is probably a little
Right.
harder.
Own a home at all?
You can't currently own a home. Like if you owned a home,
Mhm.
you wanted to buy a new home, you cannot go USDA
Okay,
because you can only own one home at a time.
one home at a time.
Yeah,
alright.
unless you can prove, and I've done these, unless you can prove that your current home no longer fits your family's
Right.
needs, then you can have another one. But that, like I said, I've done those, but you just have to do a little more paperwork and red tape.
Okay,
But typically USDA would be the outside of VA, the next one that I would go with. But now USDA is also a household income limited loan. So you as a borrower have the credit and income, but maybe your spouse doesn't have the credit, so your loan's just in your name. I have to on USDA, I have to count your spouses or your significant others, that I have to use their income as qualifying, not necessarily on the loan.
okay,
So sometimes that doesn't work in our favor. So then we would just go probably FHA if for some reason they need to make too much money in that region for USDA. Conventional loans usually are the hardest to get approved for. People typically with higher credit scores. We offer 1% down payment conventional program, which is awesome. Typically most conventional loans are 5% down. 20% down is the only way to go if you have it and qualify for it, and this way you don't pay mortgage insurance.
yeah,
But typically the conventional loans are 3 or 5% down. For like I said, we can go to 1 or 20% down
oh, wow,
to avoid mortgage insurance. So there's lots of different government programs. Like I said, FHA is a more lenient to get approved for. You can push the limit as far as debt to income ratio, a lot of guidelines. Here at Guild, we actually lend down to a 540 credit score on the government products, which is very nice. And we love manual loans. We will do the manual loans all day long. I actually closed on a VA loan last week, I believe, 620 credit score. And it was a manual. What I mean by manual is we couldn't get an automated approval. So for whatever reason, I don't remember what his case was. So anytime you do a manual underwrite, that means that the system is not liking their file. There's something on the credit, something the system's not liking. The minute it becomes a manual, you have to have a lot more red tape, verification of rent, things like that, more things you have to verify.
right,
Well,
right,
typically you also have to lend down to a lower debt ratio when you have a manual. Well, we actually here at Guild closed a manual VA last week with a 64% debt to income ratio,
That's what's
which
up.
is unheard of.
Right,
So I have found here at Guild that we are just able to kind of bend the rules a little bit and get things done just because we have a huge base and tools and arsenal to do that with.
nice,
So
awesome,
we should be able to get anyone pretty much into a home. Like I said, we love our manuals here. We actually have a little story here. We actually have a veteran that we're working on as we speak. Now, this veteran has been renting in his house for 45 years.
holy smokes.
I mean, so technically he's paid for the house, right? Well, so it's going to be our charity case, if you will, for lack of a better word. And so his wife had passed away. So it's just him.
Yeah,
And he promised his wife who passed away last year, that's their home. They've lived there 45 years, raised their kids there. And he has a low score. And so anyway, he promised his wife that he would get their home. And so I actually went to his house last week.
yeah,
Because he doesn't drive. He's an older veteran. I went to his house last week, met with him, and I met with our underwriters, and our underwriters are actually going to do this loan for
okay,
him.
on the house he's living
On the
in,
house he's living in.
they put it up for
They put it up
sale,
for sale. He has some, yes, because the owner is also getting, older in his age, and he doesn't want to mess with the rent anymore. So
right,
he's selling it, and so this veteran is going to be homeless, and that's his home,
Right.
45 years. So we are doing, we are working on this veteran's loan. At the end of the day, it's, we're basically doing it for free
right,
because that's what you have to do.
yeah, well, that's cool to know.
Mhm.
Gil does it for free. No.
Don't
I'm
say that
just
too loud.
We are recorded.
But anyways, we have lots of loans that fit every borrower. We just have to again look at all the different loan programs and just see what best fits our borrower and what makes most financial sense. We do have some down payment assistance programs as well that helps borrowers, and this down payment assistance program, for example, you can have a VA loan or USDA, which is no down payment.
Right,
And maybe you have a seller who's not willing to pay closing costs. Well, you can get this down payment assistance loan for closing costs. That helps, like, especially if you get, again, borrower who is cash poor and you have a seller who's not willing to pay any closing costs. So that's where this down payment assistance loan would be able to use it for closing costs.
okay,
So lots,
awesome.
lots of different programs that we're able to use
Yeah,
for our borrowers, get them in their homes.
nice,
So that's what it's all about. You get them home.
right? Absolutely.
Does anybody have any questions on anything so far?
No questions? All right. So, I'll read this slide. The specific requirements for these programs may change over time. So it's best to check the specific website or contact them directly. Contact Alana directly. That's the best way to do it. Alana Hayes, 580-351-7247. And if she don't answer, send a text. Yep.
Yeah, I do work all the time, 7 days a week, so feel free to call or text me. This is what my husband and I do. He's a loan processor, loan officer. Well, he's licensed, but a loan processor with me. So this is what we do, and I've been doing this for 20 years actually.
So she knows what's up.
Yeah.
She teaches me stuff all the time.
Yeah.
That's for sure.
And so, yeah, if you have any questions, even, I don't know who's all watching, but, even if you're maybe not ready to buy right now, we're more than willing to assist you with any questions. Even if you're not ready to buy right now, we can at least do a soft pull on your credit to make sure that when you're ready, I'm kind of get a game plan. If your credit needs to be fixed, we'll get you on track. So you are ready. I'll get you ready, when you're ready.
Absolutely. So no questions so far? You want to go over any of this? The income, about the down payment assistance?
Yeah, so like the down payment assistance programs, as well as USDA, most of them are the income, the total household income. So for example, like OHFA is one of the down payment assistance programs that we offer. Now they give you 3.5% of the sales price that you can use for down payment or closing costs, but that is household income limit. So if you are, again, a borrower where you have the credit score and you're good, but maybe wife's credit's not very good, so she can't be on loan with you, but I still have to count her income in the total household income. So we have to make sure that you meet that requirement. I do have now that one there. That is they give you loosely a grant because they actually give you 3.5%, but that is applied. It's a silent second. You make no payments, no interest for 30 years or however long you own the home. You was to refinance in 5 years or sell it in 5 years, they tack on that 3.5, the grant that they give you. They're just kind of advancing it to you and then just tack it on to pay off.
Okay.
But that's household income limit. REI is another one that I do as well. Now that one's a completely free grant.
Okay.
Now they give you up to 3% that you can use for down payment or closing costs. Interest rate's a little bit higher on that, but again, there's no obligation. So I had a lot of people last year, rates last year, October, September rates had kind of got up, 7.6, something like that. Well, they went ahead and got this grant program through REI, completely free grant. They got the 3%. And so I had someone at the 280 purchase price. Well, 3% is a pretty good chunk,
Right,
assistance.
absolutely.
Well, what we're gonna do is when rates drop here in the latter part of the year, that's traditionally when the presidential timeframe is when that they historically drop. Well, that's when we're gonna refinance. And that $9,000 that they had in for down payment, they never have to pay back. So it's
Oh,
kind of
wow.
cool.
Yeah, that's way
So now
cool.
that one is not household income limit. That is whatever I qualify them for. So
Okay,
yeah, so you still gotta be within their loan limit as far as the income limit, but it's whatever I use on paper to qualify.
okay,
So if I'm not using, they might on paper make too much money all day long, but if I'm not using their overtime, for example,
mhm,
I'm just using their base pay, that's
Right.
all I use, and that's all that we're gonna see and use for qualifying.
okay.
A lot of ways to be creative to get
Yeah,
things done.
no, absolutely. Sounds like it for sure. Let's see. Is that right? About the first time home buyer? Okay.
So there's a conventional, first time home buyers, loosely, FHA, you just cannot own a home. You cannot own a FHA home
Okay,
currently.
yeah,
Again, FHA, there is certain, just like the USDA, where you can only have one USDA home loan at a time.
right,
You can have FHA, at the same time, you have to fit the mold. Outgrowing your house and moving away, your current home is greater than 100 miles away.
right,
And then you should be able to fit all the requirements for a second FHA home. We have a conventional program that allows you to put 1% or 3% down payment for first-time home buyers or house if you haven't owned a home in 3 years. But typically, most people go the FHA route, easier to get approved for.
okay, Cool.
First credit score, again, most of them are to be dependent upon the program that they're using.
right,
We do lend down to a 540, VA, all the government programs, VA, FHA. Conventional typically have to have the higher credit score. I am actually doing several low score conventional loans as we speak. But typically when you have a lower score, especially on conventional, you're gonna have a hit or more of a discount point for the low score. You can get approved for it, but you're gonna probably have to
a little bit, yeah,
dive deep in your pocketbook a little bit
Pockets,
for
yeah.
that, yeah.
Absolutely,
Some of them do require home buyer education courses.
okay,
And those mainly for some of the grant assistance programs. Some of
Okay.
them, especially the conventional ones, you usually will mandate you got to take that course like that. But for the most part, I don't see that a lot. I always recommend them doing that. We have
Right.
to offer them, but only a handful of loan programs will actually make you take that course.
okay,
You can close on a home, and usually have 60 days or so, for you to occupy it. But sometimes, at least maybe a family member. I actually had a military couple where he was back there. He is still back east, in Virginia. We closed on his VA loan 2 or 3 months ago, but he moved his family here. And so even though the veteran's not here, he's not occupying, at least a member of his family is. So that covers the time requirement to occupy the property. Again, there are ways to be creative about
Right.
that as well.
absolutely,
Yeah. But and then as far as any property requirements, USDA, again, local areas, you have to stay within the USDA guideline areas. The greater Lawton, the greater Duncan area do not qualify here in this area. And as far as any property requirements, typically that's when we look for, I don't know if this is what this is guided towards, but appraisal requirements. Because we can't close, right?
Right.
Until, any of the appraiser calls for repairs until those are closed.
okay.
But anyway, so other than that, that's pretty much will cover that slide. Does anyone have any questions on anything so far? And even if you guys think of something later, feel free to
Yeah,
call, text, or whatever. Because, you know, we're gonna end this and then you're like, oh man, I needed to ask them that. So feel free to always reach out.
Absolutely. Let's see what the next slide.
Yeah, as far as when we kind of covered that already,
Yeah,
we do, like I said, VA and USDA is no down payment. All the other programs have 1, 3, 3.5% down payments. So the bottom line is what we do with the borrowers is to make sure that, you know, we are getting them in the best loan that's for them, meets their needs. Because you might have a borrower who qualifies for 3 different loans. You gotta pick,
what fits
yeah,
them best,
which one,
absolutely,
yeah, which
absolutely,
one fits their needs. So you have to look at the big picture, which one
Right.
makes more financial sense.
right,
And as far as pre-qualification, pre-approval, that's normally, when I offer a letter, it's normally for 4 months,
okay,
okay? However, 4 months for pre-approval. However, during that time frame, please don't don't go get any new debt, don't go buy a car. Just kind of maintain your current situation. Don't, if you have a credit card, $1,000 Capital One credit card, for example, that you only owe 300 on it, keep it at that or less, because you don't want to, you know, max out your credit card, because then all of a sudden your minimum payment on that credit card is now gone up, and I was maybe qualifying you on the lower payment. So I always just kind of watch that as well.
okay,
But because they will check your credit right before they close. So, and so, you know, that's one thing to always, you know, tell people, don't do anything crazy, just,
right,
you know, keep maintaining. I said, if you have to do something, please call me, talk to me first, because there's other ways to be creative to avoid that, you know, have your mom buy it for you. I had a lot of people. The most common has been cars. I had several home buyers go out and buy the new furniture. They went and bought new furniture for the house that they didn't own yet,
right,
right? And so that was a, you know, couple $100 payment. Well, that took them over their debt ratio. I mean, I was able to be creative and get that done. I forget what I did on that particular case, but it's easy to forget about these things.
Right.
And so you just have to kind of
especially if you don't know,
right?
you know?
Yeah.
mean, you
Yeah,
know,
so buying a house, I mean, it's a big step. So you just got to make sure that us as the lender kind of guides the borrower, whether they're a first time home buyer or not, be there for them. Ask all the, you know, they might have lots of questions that they're going to ask and answer them, because there's not a stupid question. There's just a lot to learn, and that's what we're here for. Whether it's myself or Travis, we are here because we're your team. We are here to help you close on your home, help you to get you home.
absolutely. Absolutely. Let's see what the next slide has. Pre-approval. She's kind of touched all that. That's for,
And that's one thing too, as far as this slide here. So even though, I mean, I got to tell you like it is. So I might be able to pre-approve you for a $200,000 house all day long. Your debt ratio is tight. You might do it on paper all day long, but the thing of it is, do you want to eat macaroni and cheese, you know, every night?
Right.
I mean, you might like it. I like it, but you
Yeah.
know, you have to kind of still live within your means. I don't
think
want
anybody
to.
wants to be house poor.
Yeah, and you don't. I would, you know, I
Yeah.
wouldn't be able to sleep at night knowing that, oh my, you know, gosh,
Right.
you know, I'm just. It's not all about the money, you know. It's not all about you know, getting
Absolutely
this
not.
borrower to the closing table. You have to make sure that they're going to be able to, like you said, not be house poor, make sure that they're able to make the house payments and live comfortably. So even though I might pre-approve you for 200, you know, I might tell you like, well, you might want
Yeah.
to kind of within your budget, so you're able to
Right.
kind of live a little bit, keep it
Yeah.
about the 150 mark, and then you have some breathing room.
Yeah.
Because at the end of the day, that's what it's all about, you know,
Yeah.
giving someone a pre-approval, a home, and be able to live comfortably.
Absolutely. Absolutely. Good stuff. Thanks, Alana. Approved for mortgage. Kind of just hit all that. Yeah, this is a good one though, saving for a down payment, once you start thinking about you want to buy a house, just start saving every little bit you can just to put aside just in case, because there's a lot of different expenses for buying a home. Like she was talking about earlier, a lot of time we can get those paid for, but maybe not all of them, so just save as much money as you can, I would say.
Yes, because even though you might get grant assistance on loans, say you have say you're gonna go USDA and you're gonna get a grant for some of the closing costs, because USDA's and VA's no down payment, but some of these grant programs will give you 3 or 3.5% for closing costs. Well, that's not gonna be all your closing costs. It's probably maybe 60%-ish. So you're still gonna have to have some money for closing. It may be some reserves. Some loan programs will, even though on paper you might need, say, $4,000 extra cushion or reserves on paper, but you don't necessarily need to bring it to closing.
Okay.
And what I mean by reserves, the lower the score, sometimes you have to show more money in the bank.
Okay.
Things just have to make sense. So, for example, if you have a borrower, their credit is blemished, a lower score, maybe they currently rent and the rent they pay $800, right? $800 a month. Well, the new house is going to be $1,200 a month. Well, if they're already showing a lot of overdrafts, things like
Right.
that in their bank account, well, that's how you have to look at it. The underwriter's like, well, how are they going to, if they can't, I mean, I know things happen, life happens, but if they are showing overdrafts and, NSFs in their current bank account at $800 of rent, how are they going to manage it with $1,200, right? Because now their income, their expenses, just the housing expenses went up $400, and so that's how we look at it. That is how the underwriter looks at it. So sometimes the lenders, I mean, we have to show sometimes the bank statements, right? Some of the loan programs will only show 1 month. And so if there's blemishes over here on one side, we try to be creative and kind of shift the focus for the underwriter over here. Don't look over here, but look over here.
Right.
And so there's just ways like that we just have to be creative.
Okay. Cool.
And so that's just basically stating, as far as like probably when you own a home, in general, you having, the HVAC system stops working, things like that, just unforeseen expenses.
Right.
Which actually leads me to something is a home warranty. Highly recommend a home warranty.
Right.
And sometimes you as the realtors would get the seller to pay for it. And if not, have the borrower pay for it anyways. I personally had to use a home warranty before. I had underneath my house, not the house I'm in, my previous house, my hot water tank broke, and we had over 30,000 gallons of water underneath my house, and we lost the subfloor. And so anyway, thousands and thousands of dollars of damage. Well, all I just had to pay was my co-payment for my home warranty.
Oh.
And so, and that was an older home, so I always recommend home warranty. You use that was in first position. I did not have to turn it into because it was a covered item, I did not have to turn it into my insurance. Because you know how it is when insurance, you turn in the claim, well, all of a sudden your rates go up.
Absolutely.
So,
only have a certain amount of claims.
Yeah, so all day long, home warranty.
Home warranties.
I recommend, and that kind of helps with any unforeseen things you might have. And actually, there's some home warranty, because there's different plans. There's some home warranty plans you can pick where, and I've actually had a borrower do this, where it was their air conditioning unit. And so you call, they was having issues, they called and they got it fixed. And anyways, bottom line is this commercial HVAC company had to go out 3 times because they kept having issues with it. And this particular plan that they on, after so many visits that they couldn't get it fixed, they got a brand new HVAC system.
Oh,
all they had
wow.
to pay was their $50 co-payment.
Oh, wow.
Or
Each time they came?
Yeah. So just like a health plan,
Yeah,
you know, you make a
okay.
co-payment. So yeah, at the end of the day, they paid like $150, you know, 3 co-payments, and they got a brand new air conditioning unit. So always recommend getting those and use those first position before you send it to your homeowners insurance.
Homeowners insurance.
Mhm.
Awesome,
Mhm.
awesome. All right. Are there any questions? No, no questions? Well, I want to thank everybody for getting on, and I want to thank Alana for taking time out of her day to come do this.
So you're welcome.
So,
Yeah, and like I said, we're here to help you, and you might not have any questions now, but if you have any, you might want to just reach out to Travis or myself. That's what we're here for, because we are here to see you from point A to the finish line and everything in between. Buying a home is it's a major decision, and so we are here to guide you.
absolutely. All right, well, we're signing off. Deborah, it was good seeing you. Thank you. We'll see you later. Thanks for being on, JC. Have a good one. Bye.